inflation is not going down to 2%. It's going to be much higher indefinitely, and that real interest rates are going to be negative indefinitely. And then when that happens, the Fed's credibility will be gone. We're not going to have these 2% break evens. Our creditors are going to demand a much higher premium for inflation and for the credit risk of the United States. And we can't afford it. And so it's just going to lead to even more money printing and higher inflation. And then we get in a, perpetual kind of death spiral where bonds keep falling, rates keep rising, prices keep rising, the government keeps printing to buy more bonds, to keep rates from rising, which pushes prices higher, which puts more upward pressure on interest rates, which causes bigger deficits and more money printing. And it's just an endless cycle of currency basement until it, really runs out of control. And then you get a potential hyperinflation scenario. Mises called, the crack up boom. But, this is how fiat currencies end. And that's the direction that we're headed. And, we're in very dangerous political waters because, there is a big tendency to blame capitalism for stuff that goes wrong, even though it's government intervention in capitalism that is the problem, not capitalism itself. Capitalism is always the solution to government-created problems, but the governments never accept responsibility for their problems. They blame capitalism, and, the public in many cases buys into that. They blame the greedy businessmen and the corporations and the speculators and, whoever it is that the government vilifies. And so they're going to try to do that, obviously, with this next crisis. But it's always hard to know exactly how it's going to play out as far as the timetable because, we're already way beyond when it should have happened. It's ridiculous that this is almost 2025 and we have a $36 trillion national debt that we're spending over $1 trillion a year on interest payments on that debt. The Fed's got a $7 trillion balance sheet, and we haven't already had a crisis. I mean, you would imagine with, the deficits this large and the imbalances this great that something would have already cracked. We're literally living on borrowed time, and so there's no way to know, when the music stops. The problem is, in order to get elected, you have to really lie to the public to get elected. And then once you've told so many lies in order to get elected, I mean, how do you tell the truth and say, look, everything I said to get elected was a lie? It's kind of hard to do that. On the other hand, if you campaign telling the truth, it's going to be very difficult to get elected. I know what needs to be done to fix the problem. I mean, they are fixable, but, they're not fixable the way Donald Trump pretends they are. You hear Trump speak at a rally and he says, well, all you have to do is elect me and it's going to be a boom like we've never seen before. The economy is going to boom. You're going to be so rich. It's going to amaze you. Everybody's going to make so much money. It's going to be the greatest thing in the history of the world. And, just vote for Trump. And just all I have to do is assume office, and this is going to happen. Right? And, my tax cuts and drill, baby, drill, or whatever he's talking about. But none of this is true. And of course, all of this, over-promising is going to be difficult when he under-delivers because we're not going to have an economic boom. We're far more likely to have an economic bust. Now, that doesn't mean we wouldn't have had the bust under Harris. But if you campaign and you say, if you elect me, everything's going to be great, and then it's not great, it's almost like, well, it's your fault then or something. It's hard. It's much better to prepare people in advance. Look, things are going to get worse even if you vote for me, right? Telling the truth that things can only get better if they get worse first. But Trump is promising immediate results, no pain, just gain, right? So nobody is prepared for what's actually going to happen. So that is a problem. But the question is, can you get elected, promising short-term pain for long-term gain? Yeah, I'm going to fix the problems. But in doing that, things are going to get worse before they get better. We have to spend less. We have to save more. And when we do that, that there's some short-term problem. Donald Trump is promising, I know you're fat and out of shape, but just vote for me and I got a magic cream for you. Just swallow this. You'll be in great shape and, you won't have to diet. You could even eat more. Think about how long it took for Argentina to take a shot at Malay. I mean, we're not there. We're not Argentina yet. Now, the good news is we're going to become Argentina. So maybe we will, at some point, have enough pain that we'll be willing to try something different. But right now, we still want politicians promising to make the pain go away or to have a painless solution. They had been making those empty promises in Argentina for so long that the public wasn't swallowing it anymore. and things had gotten so bad, they're like, okay, I mean, we can't handle any more government solutions to these government problems. Let's try a different approach. And of course, Malay's approach is government is the problem. Let's get rid of it. And he just cuts things and eliminates government spending. The natural response to a problem in government is more government. I mean, that's what Harris is promising. More government spending. Oh, there's problems for housing. Let's the government give everybody $25,000 to buy a house. Oh, there's problems with small businesses. Let's give all people $50,000 credits, tax deductions, whatever, to start their business. Or, oh, it's expensive to raise a family. Let's give everybody $7,000 for every kid. I mean, this is just more government. It's just bigger deficits, more inflation. That's not going to help. What we need is to eliminate a lot of government. But again, even Donald Trump, he talks in the abstract about making government efficient, but government can never be efficient. I mean, by definition, you're not going to get an efficient government. That's why government needs to be small. Whatever you have government do, they're going to do it inefficiently. It's not the private sector. That's why you want most of the stuff to be done in the private sector, because that's where you get efficiencies. But what we need is just to cut government, not make it more efficient, just eliminate a lot of the functions that it's doing. And these are things that constitutionally it has no business doing in the first place. Like, look right now at all the problems with FEMA, right? We had this huge hurricane. Now we have another hurricane coming, and FEMA's out of money, and everybody is upset. But why do we even have FEMA? There's nothing in the Constitution that says the government is supposed to provide relief for natural disasters wherever they occur. This is not a federal function. This should all be done locally by local and state governments and by individuals on their own. And initially, you go back to the Grover Cleveland days when they tried to pass some kind of bailout. There was a drought in Texas, I think, and there was like a $10,000 appropriation to help these drought-stricken farmers. And Grover Cleveland vetoed it, and he said, I can put my finger on no section of the Constitution that authorizes this expenditure. And he said, look, if you want to give money of your own, donate it. And he did. He wrote a check, I forget how much, and he sent money. And they ended up raising a lot more money than the $10,000 government appropriation. But the point was, this is not up to the federal government. But what's happened over the years, especially since the days of Franklin Roosevelt and then, Lyndon Johnson and all that great society, war and poverty nonsense, the government now, every emergency, every disaster, no matter where it is, the government is there throwing down huge amounts of money. And as a result of this, locally, nobody is prepared. Everybody is now conditioned to believe that the federal government is going to step up and provide the relief. And so it's a huge moral hazard. And so on the local levels, we're not prepared. But it's much better for North Carolina to take care of its own problem, as opposed to Washington, D.C. taking care of its problems. And California takes care of its problems instead of outsourcing it to Washington, D.C. You have Washington, D.C. trying to take care of wildfires in California, hurricanes in the Carolinas. I mean, whatever happens, there's so much corruption in there at the federal level. There's so much, graft, very inefficient way to do it. And the government, by throwing money at people, people don't have enough private insurance. I don't want insurance. I'm just going to get government bailout money. The state governments don't have their own emergency funds because they figure, well, I'm going to, why do I have to save? We have a disaster. Washington, D.C. is going to come in and, so there's a moral hazard. Nobody wants to save for their own, rainy day fund. Meanwhile, the government doesn't have any money to give Florida. They're going to have to borrow it from China, or the Fed's going to have to print it. It's not like the federal government even has any money, but it has the printing press. This is the problem. The real disaster is the moral hazard that FEMA creates, not the natural disasters that has been established to deal with, but it's a man-made disaster that's even bigger. If you look at it so far this century, gold started the century in January of 2001. Gold was under 300. And so it's now over 2,600. So it's gone up over 8-fold. The Dow Jones has gone up about 4-fold. A little bit more. It was about a little over 10,000. Now it's a little over 40,000. So a 4x increase in the Dow versus an 8x in gold, which means priced in gold, the Dow is actually, about half of what it was 20 years ago, which really puts in perspective what's going on. It's not that the Dow is more valuable. It's that the dollar is less valuable. So you need 4 times as many dollars to buy the Dow, but you need 8 times as many to buy an ounce of gold. But I still think gold is cheap historically. I think the level now is about 16 to 1 or so, 16 ounces of gold to buy the Dow. I think it's going much lower. I mean, certainly below 10, probably below 5. Whether it gets to 1 to 1, it's a tough call. Maybe 2 to 1. But even 2 to 1, where would that be? Well, gold would have to be 20,000 if the Dow is 40,000. But we've been there. We've been at 1 to 1 almost twice in 1932 and even 1980. 1980, it was $800 for an ounce of gold and $800 for the Dow. So they were about 1 to 1, or they're approximately. Now, that represented a very cheap Dow and very expensive gold at that point in time. But it happened, right? So if it happens again, it doesn't mean that, gold should be that expensive or that the Dow should be that cheap, but it can happen. But right now, the price is still too high for the Dow relative to gold. So I forget what the long-term average is, but it's lower than it is right now. So gold is cheap, relative to the stock market. And that's going to change because the stock market should not be as richly valued as it is, given the enormity of the problems that are not being priced in. But that said, if we have hyperinflation or even extremely high double-digit inflation, then you would expect the Dow to price that in, but not in terms of gold. So I can be very bearish on the Dow and think that it's overpriced or overvalued, but that doesn't mean I don't think the price can go up in terms of dollars. It absolutely could go up. I mean, the Dow can go to 100,000, but if gold goes to 50,000 at the same time, the Dow has crashed because now we're down to 2 to 1 from 16 to 1. So you have to look at both prices to know what the Dow is really doing, because you got to separate out the dollar, because the dollar has lost a lot of value. When the country started in 1789, you needed $20 to buy an ounce of gold. And even as late as 1933, before Roosevelt devalued, you could still get an ounce of gold for $20. That's like 150 years, and the dollar didn't lose any value. But starting in 1971, because gold was still $35 an ounce until 1970. But once Nixon took us off the gold standard, now you can't buy an ounce of gold with $35. You need $2,600 to buy that ounce of gold. Now, what has changed since 1970? The gold hasn't changed. Gold is exactly the same, right? They haven't improved gold, right? Gold is not like a car or a telephone, something that's gotten better, right, over time because we have better ways of making it. Gold has not changed. It's exactly the way it was 5,000 years ago. So if gold can go from $20 to $2,600, it can go from $2,600 to $26,000 or $260,000. The only question is, how much longer is it going to take to get to those prices? But I think the rate at which the dollar is going to depreciate is going to accelerate in the years ahead. So I think the dollar is going to start losing value faster, let's say over the next 10 years, than it has over the prior 10 or 20 years. So I think you're going to see that reflected in an even higher gold price. But again, it's not gold going up, it's the dollar going down, and the euro going down, and the pound going down, and the yen going down. All these currencies are being debased. It's not just the dollar. The mining stocks have barely outperformed gold year to date, and given how cheap they were, and if you recall too, at the February or March of this year, we had major downgrades of Barrick Gold, Newmont Mining. Both of those stocks were hitting multi-year lows. They didn't just hit 52-week lows, they hit multi-year lows earlier this year. So the mining stocks were very cheap, and then gold had this huge rally, and the mining stocks, didn't give you the type of returns, the type of leverage that you would have expected given how cheap they were before we had this big rally. And that's because when gold was at 2,000, everybody assumed that that was the top and that it was just going to go down. And that was the basis by which they downgraded Newmont and Barrick, as the analysts didn't see any upside in gold. They thought gold had topped out. Little did they know this was going to be the best year since 1979 for the price of gold. And, if you watch these stocks, and I watch them pretty closely, investors are very skittish. There's very little conviction because at the first sign of trouble, you see a move down in gold and they just dump these gold mining stocks. They'll get crushed. And then it takes several days rallies for them to come back. to where they were. So gold can make a new high and the gold stocks, won't. And then it makes 2 or 3 new highs in a row. And then the gold stocks will finally catch up and make a new high. Then you get a small correction. Gold drops maybe 30, 40, 50 bucks. And gold stocks lose almost everything they gained. And so now, even when gold makes another new high, the gold stocks are still 5% below the previous new high because they haven't even come close to recovering what they just lost. And it looks like, too, like the gold mining stocks just trade as a proxy for the gold price that day. People are still not looking at them as actual businesses and thinking about how much their businesses have improved with the price of gold. When you got record low oil prices for gold miners, that's good for their profits. I think we're going to start to see some big beats in the mining companies. Meanwhile, the big mining stocks, Barrick, Newmont, are trading at discounts to the S&P when they historically trade at premiums. They're trading at very cheap price to book. I mean, these companies are making a lot of money. They're poised to increase their dividends, increase stock buybacks, and nobody owns them. If you look at the big gold mining ETFs like the GDX, GDXJ, they've had net outflows this year. Investors have been selling gold stocks, just like they've been selling physical gold. GLD, the biggest gold ETF, has had net outflows this year. The public is not involved at all in this rally, which goes to show you how much bigger the rally is going to be when they finally get involved. And not just the mom and pop retailers. It's going to be, the institutions, the big boys are going to come. I mean, right now it's foreign central banks, but they're going to step it up. They have a lot more gold to buy. They've barely scratched the surface. Look now, Poland just announced that they've got more gold now than the UK. But this is a race. I mean, these central banks need to replace their dollars with gold because they can read the writing on the wall, right? They wrote it. They know the dollar's days as the reserve currency are numbered, and they have to prepare for a post-dollar world. And that's a world where gold plays a much more important role as a monetary reserve. And so that's why these central banks are buying. And they've got a lot more fiat to convert to gold, particularly US dollars. So I think this is a great opportunity. I mean, people should be buying the physical metal. Gold and silver are still very cheap. Silver is barely above $30 an ounce. It was $50 in 1980. There's not that many commodities that you can buy, for 40% off their 1980 price. So silver is one of them.